Get some more on all of that, and we are joined now by Stan Shamu from IG in Melbourne. Stan, good to see you there. Just firstly, US dollar, the real winner there on the non-farm payrolls?
Yeah, absolutely. I think it was exactly what a lot of investors and analysts out there were expecting. Of course, from that ADP payrolls number that we got on Wednesday, I think sentiment was largely skewed towards US dollar strength. And of course, the numbers really did deliver. We had a very strong reading on the non-farm payrolls print, 195,000. This smashed expectations of around the 165,000 mark. So it really did come in very strongly. The US dollar responded straight away to that with the dollar index pushing to around 84.49. Now this essentially saw it break through to this year's highs as well. So it's looking quite positive for the US dollar, but unfortunately US dollar strength is generally negative for the risk space. And of course straight away we saw the euro, the Aussie dollar and the pound lose significant ground to the greenback. Of course with the Aussie dollar we're at about 90.5 at the moment, and it does look like we're poised for further weakness heading into this week. We have had a fairly weak start as well to the risk currency trading for the week, and that's generally a good indication of where sentiment will be skewed as we head into this morning's trade, considering that of course the equity markets, the major ones that is, are still closed at the moment. We've got the euro as well falling to about 128 against the greenback, and that's particularly going to be an interesting one, considering Mario Draghi is on the wires again later today. He generally does have some comments on the future of the Eurozone, growth issues, and of course the trouble in the periphery, particularly with Greece and Portugal continuing to be recurring problems for the region. So I think the single currency is one of the most important currencies to watch out for today, and that should be quite an interesting day. For the Aussie dollar, we only have ANZ job ads today, so it's not too big a reading. Of course, even if the number comes in fairly positive, I think all the fundamentals for the Aussie dollar are still quite skewed to the negative side at the moment. Perhaps around 90, we might find some buying interest and then possibly some selling into strength. But of course, the medium-term trend is still largely weaker for the Aussie dollar. And of course, we even heard from Glenn Stevens last week saying he expects unemployment to rise. So it's hard to see any positive prospects for the Aussie dollar at the moment.
In terms of the yen, it was one of the hardest hit, wasn't it, against the greenback? We've got the Bank of Japan meeting this week. What can we expect?
Yeah, of course, with the dollar yen, it was one of the biggest beneficiaries of that US dollar rally. And of course, that will lead or feed through to Japanese equities today. We're currently calling Japan up 1%, and that will see it largely outperform the region, trading around 14,400. So it's a very strong start for Japan indeed that we're tipping. And of course, we've got the current account balance for Japan due out at 10 to 10 today as well. So that might be a bit of a lead for the rest of the region. Of course, with Japan trading so much stronger than the rest of the region, this might prompt some investors to grow a little bit more positive about the equity space in the rest of the Asian region as well. We've got the upper house elections from Japan due out in 2 weeks. At the moment, the dollar yen's trading well above 101 following the US dollar rally, and that will definitely appease Japanese officials as we head into these upper house elections. They already have their campaign underway, and of course, if Abenomics proves that it is working, then it will be a bonus for officials heading into these elections as well.
Just in terms of the ASX 200 then, what's your opening call for it?
We're actually calling it weaker at the moment, about 0.4%. So that's about 4,822. So that's quite discouraging considering the strength in the US markets. But of course, with the US dollar stronger, this generally has a weaker effect on equities for the rest of the world, really, particularly in the risk space. I think the resource names will be the ones that will lead the market lower today. We had the miners sold off quite sharply in London on Friday, so we're actually calling, I think BHP's ADI is actually pointing towards a 1.4% drop at the open today, so that should see the rest of the iron ore names struggle, despite iron ore actually being up about 0.5% on Friday as well. With the gold names, we expect that weakness to continue. Of course, gold was one of the most hit metals out there following the US jobs numbers, so that's quite negative. It's now it's just come off those lows in the 1,208 level, but it certainly seems like there will be renewed pressure on gold in the short term. So watch out for the likes of Newcrest. At the same time, we've got outside the resource names, we've got GrainCorp coming back into play. There is talk that there's pressure on the Treasurer Chris Bowen to cap this deal with Archer Daniels, and maybe we'll see some developments on this story as the session progresses. But at the moment, it seems like investors will certainly look at these reports in stride and see what exactly it amounts up to. Of course, this was predicted back in the day, but it looked like the deal was going to go through with no hiccups. But with the recent change in government, of course, this is coming back into play, and it should be another interesting one to watch today.
Stan, as always, thank you so much.
Cheers, Ray.
Stan Shamu there from IG. Now, do stay with us. We're going to take a very quick break here on First Business. Coming up, we'll have some more on one of our top stories. Crown boss James Packer setting his sights perhaps north to Queensland.
It's more sporty with dynamic handling. More safe with 7 airbags and ESC. And even more awarded.